Welcome to Seven Bulls. We break down finance so that anyone can understand. Roll the intro. Hello, fellow investors. Welcome to Seven Bulls. Today, we're getting into the Terex Corporation. If you're on the hunt for a company with a rock-solid foundation, a proven track record, and exciting growth prospects, then this is a company to look into. Before we move on, if you find value in today's video, make sure to give it a like and share. Also, watch until the end and feel free to leave a comment and hit that notification bell. All of these things help us with the algorithm, in turn helping us grow the channel. Thank you. Now let's get to it. Terex is far more than just another construction equipment manufacturer. They're a global powerhouse in lifting and material processing solutions. We're talking about aerial work platforms, cranes, materials handling equipment, and processing solutions that span diverse sectors like construction, infrastructure, mining, and even the waste and recycling industry. But before we get ahead of ourselves, let's lay down some concrete facts. Terex commands a market cap of a little over $3 billion, placing it firmly in the mid-cap category. With shares currently trading around $45 and a trailing PE ratio of 6.7, some investors might see an undervalued opportunity compared to the broader market. But remember, valuation is just one tool in our investors' belt. What truly sets Terex apart is their unwavering commitment to financial strength. They boast a current ratio of 2.39, indicating they have more than enough assets to cover their short-term liabilities. And here's a key metric that speaks volumes. Their debt-to-equity ratio stands at a remarkably low 0.32. This tells us they're not overly reliant on debt to fuel their operations, a clear sign of prudent financial management. Now, let's shift gears and talk efficiency. Terex is delivering a return on equity of 26.91%, meaning they're putting shareholders' investments to work effectively and generating solid returns. And with an operating margin of 11.39%, they're demonstrating impressive cost control and the ability to translate revenue into profits. Speaking of revenue, Terex generated a massive 5.1 billion in the last 12 months. That's a lot of heavy machinery rolling out the door and contributing to projects around the world. But they're not just focused on top-line growth. They're also delivering strong bottom-line results with a net income of 464 million and earnings per share of $6.84. For income-focused investors, Terex offers a dividend yield of 1.48%, and they have a history of consistent dividend increases. That's a welcome bonus on top of the potential for stock price appreciation. Now let's drill down into their recent acquisition of the Environmental Solutions Group, or ESG. This wasn't just a random bolt-on acquisition, it's a strategic masterstroke to expand their presence in the rapidly growing waste and recycling sector. This industry is fueled by megatrends like increasing urbanization, heightened environmental awareness, and the global push for sustainability. But here's where the ESG acquisition gets really interesting. The waste and recycling industry tends to be less cyclical than traditional construction. This means that even when the construction cycle hits a bump in the road, the demand for waste management solutions remains relatively stable. By bringing ESG into the fold, Terex is effectively diversifying its revenue streams and reducing its overall vulnerability to economic downturns. It's a great move to enhance stability and resilience. Furthermore, ESG brings with it a strong portfolio of brands and a loyal customer base. This provides Terex with immediate access to new markets and cross-selling opportunities. The acquisition also opens doors for Terex to leverage its global distribution network to expand ESG's reach internationally. However, no investment comes without its share of risks. The construction and material handling sectors can be sensitive to economic headwinds, and competition in this space is fierce, with industry titans like Caterpillar and Deere constantly vying for market share. Terex also faces challenges such as rising raw material costs, supply chain disruptions, and the need to continually innovate to stay ahead of the curve. So, is Terex the right investment for you? I've provided the blueprint, but the final construction decision rests with you. Conduct your own due diligence, carefully consider your investment goals and risk tolerance, and determine if Terex aligns with your overall portfolio strategy. That concludes our video of Terex Corporation. If you found it informative and insightful, give it a thumbs up and subscribe to the channel for more investment deep dives. Hit that notification bell so you don't miss future uploads. Thanks for watching, and remember, keep up with your financial education. You're the only one in charge of your future. Be safe.
We grew.